Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I'd like to talk about day trading with regards to one of the big downsides, and that is short-term versus long-term capital gains rates. As you guys know, all proceeds that are made from a sale of a stock are subject to taxation, but depending on how long that stock is held before you sell off, there's two different tax rates that are applied, short-term versus long-term capital gains rates, and there's a big difference between those two rates. So I thought I'd go through some of the day trading I've done with Ford to show you how big those differences can be and how big of an impact they can have on your overall rate of return. As you guys know, I've done a lot of trading with Ford here, a lot of day and swing trading, and I've generated a little bit of profit by doing that. You can see here, unfortunately, Ford over the last week or so has dropped quite a lot here, about 5% or so, and you can see my total return there, 1338.46, is down 5.02%. That's a little bit off, but for the purposes of this demonstration here, we can consider that to be about accurate. However, I've done a lot of day and swing trades, majority day trades. I made about $4,000 or so during those trades, which you would think is quite good, but you also need to consider the taxation that will be applied at the end of the year when taxes are filed. So that $4,000, if you take a look at the different tax rates, ordinary income, short-term capital gains rates versus long-term capital gains rates, let's say the 33% tax bracket, I'll need to pay $1,320 of that $4,000 back at the end of the year in taxes, which you can see is quite a large margin, 33%. However, if I were to simply hold that stock longer term to make that same gain, I'd only be paying $600 or 15% with long-term capital gains. So essentially, over half of my taxes would be saved. So $720 would be saved on taxes, which you can see is a huge amount with the overall return or rate of return. Now, it's a little bit different with this stock because I've done quite a bit of day trading, a lot of individual trades, but if you've only done a couple of trades, it really wouldn't make any sense to do any day or swing trades for that profit. The long-term capital gains rates are a significant advantage over the short-term capital gains rates, and it can significantly impact your overall rate of return. In this example here, let's say that $4,000 was only generated by a few different trades, but the price of the stock, it may have went up higher than that $4,000 short-term gain I made with the day and swing trades. To be losing a significant amount. With the example I gave, about 18% or so, 20% or so for other tax brackets. If you're a little bit lower in the tax bracket, income tax bracket range, you're still going to be saving yourself 10%. The 25% tax bracket range for those folks making around $75,000 to $151,000 a year, you're saving 10% of all gains. And if you think about overall rate of return of 10% being an excellent return for the year, you can see that you're essentially costing yourself quite a bit of overall return by simply doing short-term gains. So that is one of the downsides of day trading and swing trades as well, swing trades under a year. A lot of investors don't take that into consideration when doing trades. So unless you're doing a lot of trades and doing quite well with your short-term trades, including day trades and swing trades, it's probably better just to do a buy and hold strategy. And that's why a lot of investors do the buy and hold strategy. It's not necessarily because they don't want to do any day or swing trades, but it's because of the tremendous taxation benefits by holding a stock greater than 1 year before getting rid of the stock. So I just wanted to kind of bring that up. I know that's come up quite a bit in the comment threads. Discussion about, is it really worth doing day and swing trades knowing that you're going to be subject to a lot more taxes at the end of the year? The example here, 20% more or around 20% more of your gains will be essentially taxed rather than, 15 or 10%. So huge tax savings with regards to long-term versus short-term capital gains rates. And the same thing applies to dividends as well. If you're doing a lot of day trades, like for example, Ford here has a great dividend on the bottom here. You can see 4.46%, which is a little bit higher now since the price of the stock has trended down. But if you're doing a lot of day and swing trades, And again, with Robinhood, you can't specify the tax lot, so these will essentially all be short-term holdings for you if you do a lot of day and swing trades. Your dividends are also taxed at a much higher rate as well. It's a little bit more complicated with dividends, but essentially if you're buying and selling the stock off quite frequently, you'll be subject to a lot higher dividend rates as well. So not only the capital gains rates will be higher, but the dividend rates will be higher, and at the end of the year, that'll add up to a significant portion of your overall returns that need to be paid back in taxes. So just wanted to put a quick video out highlighting the differences between the short-term and long-term tax rates, and these again apply to both capital gains as well as dividend tax rates. So something to take into consideration with your day and swing trades. So yeah, just kind of wanted to talk about that in the video. I know I've had quite a few viewers asking about that. So my overall return with Ford's been good, about $4,000 or so, plus or minus with day and swing trades. So more than makes up for the increased tax rates. But if you guys are only doing a few day and swing trades per year on a particular stock, it probably is best just to do a buy and hold strategy to reap the benefits of the much lower tax rates. So yeah, just wanted to put out a quick video about tax rates. Let me know if you guys are taking this into consideration and doing a lot of your trades. I know there's a lot of stocks that I simply bought one share of, I'm looking to get rid of, but since the tax benefits are so tremendous, I'm essentially saving and I'll be doing those trades after 1 year. You know, there's a lot of consolidation I like to do in my portfolio currently, but because of the increased exposure to capital gains rates, I'm going to be holding those stocks for a year before getting rid of those stocks. So that's why I also have quite a few stocks in my portfolio, but there's only one share of that particular stock. I'm not doing any dollar cost averaging with those stocks, but definitely want to save some money with regards to tax exposure. So I'll be saving those for at least a year before selling off to, again, getting a 15 to 20% discount on a lot of these particular trades. So let me know what you guys are doing with your portfolios, and kind of with that, I'll end the video. As always, if you enjoy my videos, feel free to like, share, and subscribe. And until next video, we'll see you then.